This is Earnings Preview, a look at companies reporting during the week, along with companies which may have positive or negative earnings surprises. This earnings preview is for the week of September the 14th through the 18th. We won't even talk about how fast time is going by here, quoting those dates. Charles Rotblatter, Senior Market Analyst here at Zacks.com, with me once again to talk about this week in earnings, the markets, and other related topics. So actually, even though earnings season for the third quarter doesn't officially begin until sometime in October, we are going to be getting some initial earnings reports in this week, huh?
There will be. We actually have some companies whose second quarter ends in August. Typically, when we look at the third quarter, we actually expand it to include any company whose quarter ends in August, September, or October. So right now we're seeing the initial batch every earnings season. There's a small group of companies, including those within the S&P 500, that actually report earnings before earnings season, quote unquote, officially starts, which is when Alcoa releases its report, which will be in early October.
So dare you venture a guess as to what this third quarter will look like?
I do dare a guess. We're actually looking at the Zacks consensus estimates actually calling for earnings of $13.50 per share. That's a top-down estimate provided by the market analysts, and that would be about a 15.4% decline. If you look at net income, which my colleague Dirk Van Dyke calculates, we're looking at about a 16% decline. It really depends on how you actually draw the line as to what the actual number is. There's a little bit of variance just because of the way the math works out. But overall, we are looking for another quarter of declines. It should be better than what we saw in the second quarter, and part of the reason is we're starting to get against easier year-over-year comparisons. The credit crunch really started to take hold in September. Obviously, it got severely worse in October and November, but we're also looking this quarter, commodity prices were also coming down. Oil peaked in July, I believe it was about July 11th, I want to say. And so we have that downdraft helping some companies out as well. We're still in recession. A lot of companies are still struggling, not expecting to see very good revenue numbers. Earnings, in large part, will be down, but again, the year-over-year comparisons are starting to move in favor of the bulls.
Yeah, but there's a school of thought out there that says that because those year-over-year comparisons are coming from such a low ebb, that it actually paints a kind of skewed view of how well things are.
Oh, it's a complete shell game. There's no questions about it. But, if you take things in context, we really should be looking at 2 years ago, and really earnings look terrible if we compare them against 2 years ago. But Wall Street plays a shell game sometimes, and as investors and traders, we have to go along with the game. In this case, it's looking at the year-over-year comparison, and that was the trend from 2 years ago. And so everyone's going to be looking at that number, and they're going to be looking at guidance relative to how things are now going forward. So it's all about comparisons and not really the broader context of how good business is doing. At some point, we might have some people step back and go, hey, things aren't so great. But that's usually when the market's pulling back and everybody's looking for an excuse why the market's pulled back.
Speaking of which, the street seems to be a little divided these days on where the pitfalls lie in the market.
Yeah, there's a lot of fear and a lot of greed on the market right now. And it's, we're seeing the fast money move the stocks. A lot of people are staying on the sidelines. And, there's a lot of back and forth, but right now the trend is going higher. Dow 10,000 is now just a few good trading days away, and I do think there's some people on the street who would like to see that happen. I can make a big argument for why stocks should pull back right now, but right now the clear trend is pointing upwards, even though volume is horrible, and I think right now it's very difficult to fight the trend, although I do think there's risk to both buying and going short right now. And I think for the average investor, the big key is not to worry about it, but really just kind of focus on your long-term goals, focus on what's worked on the long term, and dollar cost average into this market. Don't stay out of it, but don't go out on a limb either and go after the riskiest stocks or necessarily bet the farm, so to speak, right now.
Yeah, and Friday of this week, quadruple witching day. A lot of volatility coming in on that day, maybe.
It could add volatility. It really hasn't added that much volatility as of late, and certainly with the low volume, I don't anticipate a lot of volatility, but there's always potential for it to do something. And so I'm pointing it out. It is going to happen next Friday. We'll have both futures and contracts, both futures and stock index options and contracts expiring, excuse me.
Right.
And so that does always create some possibility of volatility. Haven't seen it recently. It doesn't mean it can't happen.
Okay. On the economic docket, kind of an interesting week as far as economic news is concerned. More interesting, the president speaks on Monday about the financial crisis.
He is going to speak about the financial crisis. I haven't really, haven't really read much into what he's going to say. It is coming on the anniversary of Lehman Brothers, and my guess is he's probably going to actually tout everything the government's done to stabilize the economy, and kind of just reiterate his plan about how we need to stay focused on it. My guess, and this is just between you and me, that
Yes.
there might be a plug-in for healthcare as well.
I
But,
won't share that with anyone. Don't worry about a thing.
But yeah, we have that, and then we actually have a couple Fed officials speaking as well on Monday. So some Fed speak on there. Nothing really shocking or surprising on there. One of the people, Elizabeth Duke, is actually going to be talking about regulations and accounting. She's actually appearing before the ACPA conference, which is the big accounting organization. So don't really expect much to move the market out of there.
All right. If you want to check out a couple of stocks that could surprise to the upside and at least one that could surprise to the downside in Charles' earnings preview report, go to Zacks.com's homepage and click on the headline that is right next to his picture. That's where the earnings preview headline is, and it'll take you to that information. With Charles Rotblut, I'm Terry Ruffalo.